Far too often in the dividend community, I see people that obsess over high yielding dividend stocks that could be a setback towards their own goals. I think it's important to realize that dividend investing is not only a waiting game, but a math problem that, if solved, can lead toward your financial freedom. In this video, I want to show you how high yielding stocks and dividend growth stocks can both be used to lead you to the pot at the end of the rainbow. First, we're going to look at three very popular high yielding dividend stocks, and we're going to check out their capital appreciation as well as their dividend income received. Then I'm going to show you the same information for our dividend growth stocks, and we're going to compare the two. These groups of stocks are both going to be with $1,000 invested today. They're only going to be reinvesting dividends over the next 30 years, and we're going to see how it pans out. Finally, at the end of the video, I want to present you guys with my strategy on how I'm going to use both of these strategies to achieve my financial goals. Now, let's get on with the video. First, I wanted to give credit to Jake from Dividend Growth Investing here on YouTube for making the bones of the chart I'm going to use for today's video. I'll link his channel in the description down below. So how I'm going to do this is I'm going to present you guys with all the information from the stock, and then I'll tell you who this stock is, just so there's no viewership bias. Now, let's jump right into high yielding mystery stock number one. So we're going to take this information over to this chart, and we're going to see how it pans out. So we have that initial investment of $1,000, the annual deposit of $0 because we're only reinvesting dividends. We have a current price for this mystery stock of $19.19. The capital appreciation over the last 10 years is an average of 2.54% per year. We have a negative 5.69% 5-year dividend growth rate via Seeking Alpha, and our current dividend yield for this mystery stock is 5.74%. That information gives us this chart. And when we talk about the dividend snowball effect, we do not want it to look like this. So this is starting very high and ending not very high. So we have $57 in year one, that goes to $55 in year 5, then $49 in year 10, year 20 we're at $33, and in year 30 we're only making $30 per year in passive income. Maybe this stock does better with the capital appreciation side of things. So we're going to look here. We have year one, the end of year portfolio value is $1,057.40. At the end of year 5, it's $1,396.76. At the end of year 10, that's up to $1,847.28. At the end of year 20, that's $2,811.99. And at the end of year 30, that's $3,890.14. Now you might be saying, hey Troy, how realistic is it to expect you to only put $1,000 in a stock in 2023 and then by 2053 it turns into something? So for this particular stock and this stock only, since I know it's a very popular stock in the community, I wanted to give it another shot. So what I did is I went back to the table. We have that $1,000 initial payment, and then we're going to put $1,000 in every year after to see if we can kickstart the gains on this one. So again, all the other information is still the exact same. And with this chart, you can see that we do have a nice incline from year one all the way to year 15, from $115 in year one to $440 in year 15. But then we have the same thing happen again, where the dividends end up going down over time. So from year 16 to year 30, the dividends just steady decline every year. After that, all the way down to $310 in 2053. Now, you must be dying to know the culprit of this highway robbery. And some of you are going to be really upset to know that this stock would be AT&T, stock ticker T. But not all high yielding stocks have this terrible dividend snowball effect, the opposite of what we want. So let's move on to the next one. So again, we're getting this one set up. We have that $1,000 initial investment, $0 from that point forward. The current price for this stock is $64.79. The capital appreciation over the last 10 years is an average of 9.17%. We have a 5-year dividend growth rate of 3.8% and a current dividend yield for this stock of 4.62%. So looking here, you'll see that we do have the nice snowball effect on this one. In year one, we're going to be making $46. Year 5 is $63. Year 10 is $88. Year 20 is $158, and year 30 is up to $262 per year in passive income. So now we're getting somewhere with that passive income. Let's check how we're doing with that capital appreciation. You guys can see here that at the end of year one, we have a portfolio value of $1,046.20. In year 5, that jumps up to $1,719.75. In year 10, we're at $3,086.50. In year 20, that would be $9,089.65. And then in year 30, this one rounds out with $24,715.22 in total returns. Now, a lot of you dividend investors out there will be happy to know that this stock is actually Realty Income, stock ticker O. So we got those dividends to trend in the right direction now, and we're making that money in capital appreciation. So let's see what this last high yielding stock has to offer. Again, same criteria for this one. We have $1,000 initial investment, only dividends being reinvested since then. And then we have a $107.41 current price with a 10-year capital appreciation of 3.9%. A 5-year dividend growth rate of 4.09%, and the current dividend yield for this stock is 5.51%. That leaves us with this chart that has an even better dividend snowball effect. You can see in year 1, we would have made $55. In year 5, we're expected to make $80. In year 10, that's up to $126. In year 20, that's $320. And in year 30, we can expect to make $819 in passive income. So that's looking good. Let's check the capital appreciation from this stock. In year 1, we have a year-end portfolio value of $1,055.10. In year 5, that's up to $1,513.31. In year 20, that's at $2,380.28. In year 20, we're at $5,930.40. And then in year 30, we would be at $14,916.73 in portfolio value. This stock is none other than 3M, stock ticker MMM. So here we just saw AT&T let us down in capital appreciation and set fire to our fire goals. Realty Income actually brought something to that capital appreciation party, but there was a lot to be desired for that dividend income. And then 3M gave us over $800 in year 30 in passive income, but left a lot on the table in terms of capital appreciation. Now that we went over a good range of high yielding dividend favorites, let's see if the grass is actually greener on the other side. So again, we got the same rules over here with that $1,000 initial investment with no extra money added, only the dividends. So this first stock has a current price of $486.37 per share. Their capital appreciation over the last 10 years averaged out to 19.8%. Their 5-year dividend growth rate is 12.47%, but their current dividend yield is just 0.73%. Since we're looking at the growth stocks, I want to check out the capital appreciation first, since that's what these stocks are supposed to be good at. And you can see here that in year 1, the end of year portfolio value for this stock would be $1,007.30. In year 5, that's up to $2,117.92. In year 10, we're up to $5,328.52. Year 20 comes in at $33,249.99. And then in year 30, with only your $1,000 plus the dividends reinvested on this stock, you would have $205,120.84 in total portfolio value. Now that's looking pretty good, but let's check on the dividends to see how that works out with that very little yield. You can see here that in year 1, we would have made $7. Year 5, that's up to $12. Year 10, we're at $22. Year 20, we're up to $73. And in year 30, we're all the way up to $240 per year in growing passive income. That stock is none other than Costco, stock ticker COST, a very popular dividend stock in the growth community. Now let's move on to the next stock to see if we can get that dividend income to come up. We have that same criteria, $1,000 initial, no extra money. This stock is actually valued at $219.03. We have an average 10-year capital appreciation of 19.71%. A dividend growth rate of 17.55%, and this one has a 0.81% yield, so not that much higher, but a little bit higher. Let's see what it does to the capital appreciation over time. So you can see here at the end of year 1, we would have an end of year portfolio value of $1,008.10. At the end of year 5, it'd be $2,124.14. At the end of year 10, that's $5,378.85. At the end of year 20, we're up to $34,233.53. And in 30 years, this one would expect to be $216,014.91 in total portfolio value. That's even better than the last one, but let's see how those dividends are looking. So this one in year 1, we would be making $8. In year 5, we're up to $16. In year 10, we're at $37. In year 20, we're up to $195. And in year 30, we would be making $1,027 on that tiny, tiny yield for just your 1K and only reinvesting dividends. The company behind those numbers is actually Visa, stock ticker V, one I personally own on my journey towards early retirement. Okay, to this point, I've yet to blow even my own mind, so let's see if this last stock can do that. Getting this one set up, we have that $1,000 initial investment, no extra money except for the dividends is being added the whole time. The current stock price is $229.85. The 10-year average capital appreciation is 18.2%. Our dividend growth rate over the last 5 years is 28.54%, and this one actually has a current dividend yield of just 1.78%. Let's see what kind of difference that makes. In year 1, we would have an end of year portfolio value of $1,017.80. At the end of year 5, we'd be up to $2,141.37. At the end of 10 years, you'd be expecting $5,662.73. In year 20, you're up to $50,492.42. And then the real kicker, at the end of year 30, your portfolio value can expect to be at $850,844.44 on just 1K plus dividends. Now that capital appreciation is wild, and this one has a little bit higher of a dividend yield, so let's see what that turns into in passive income. So this chart might look a little weird, but follow me on this one. In year 1, we'd be making $18. In year 5, we're up to $52. In year 10, we're at $207. In year 20, we're at $4,066. And in year 30, we can expect to make $143,336 for that year in passive income alone. Now, something seems broken here. Well, before I rain on your parade, let me tell you who this beauty is right after this sponsor. Just kidding, I don't have a sponsor. This stock is none other than Tractor Supply Company, stock ticker TSCO. And now it's time for that rain. While the numbers I put in for Tractor Supply are absolutely true, you can Google them to check them if you don't believe me, expecting them to grow at an 18+% year over year and growing their dividend at 28+% every year for the next 30 years isn't that likely. Well, Troy, what the heck did you show all this to me for? Well, first I wanted to show you that you don't need to chase yield at sacrifice of overall returns, and I wanted to see if I can give you guys a strategy that might be the best of both worlds. But before we get to that strategy, if you guys wouldn't mind leaving a like on the video, I think it helps other people find the video, and if they might find this useful as well, that's my main goal. Don't forget to subscribe and ring the bell so you guys can stay up with 2 dividend related videos I upload every week. And if you guys do have the notification bell turned on, comment down below #BellSquad to let me know. Also, I wanted to provide you with this visual as a quick reminder of what we've discussed so far. In my opinion, the best strategy that you can derive from this video is to let your money grow in a dividend growth mindset over the course of time until you're about to retire. At which point you're about to retire, you can then evaluate that growth stock to see if it's providing you what you need in your retirement dreams. And if not, you can always sell that, take all the capital appreciation over long-term gains that you got from that dividend growth stock, and then put it in a higher yielding dividend stock to get you where you need to go. Stocks like Realty Income, SCHD, SPHD, QYLD, and JEPI come in really big right here. And I wanted to show you one example of this. Say you're in my position. I'm a dividend growth investor and Visa is one of my 11 holdings. My goal is to retire at 50. I'm 28. I have 22 years left. If I were to start my position in Visa today and only put $1,000 in and reinvest the dividends for 22 years, I would only be making $272.12 per year in dividends, which likely will not get me to my retirement goal. But I would have turned my $1,000 into $49,514.81, which I could sell out of Visa and put into income producing lower growth holding like QYLD, which is currently yielding 13%. And that would take me from $272 per year in dividends to $6,437. Now, some of you might be saying $6,437 isn't enough to retire off of. And while that might be true, you are making 6 times your initial contribution in passive income every year. And that's only with a one-time $1,000 investment and a goal of early retirement. The reality is, if you have aggressive goals of retiring early, you would need to mirror that with aggressive contributions to these accounts to make that happen. And if you're still here, first I want to say thank you for watching, and I really hope that this video provides some clearance towards your investing goals. Please leave a like on the video if you haven't already. And if you're not subscribed at this point in the video, I'm pretty sure you have to by law, so you might want to do that. And lastly, if you're curious about some of these high growth dividend stocks and you want to get paid weekly, you might want to check out this video. But until next time,